What's up, everybody? It's Shawn Gill CPA coming back at you with another video. Welcome to my channel. Today we're going to be going over how to fill out the form W-4. Now, before we get into that, please make sure you give this video a thumbs up, subscribe, hit the bell notification thing just so you get notified anytime I post. It really helps me with the algorithm and it gives this video a higher chance of getting more views and the channel growing. So the form W-4 is actually a very common form. You always fill it out when you have a new job. It lets your employer know how much money they need to withhold from your paychecks so that you're current on your taxes. So without further ado, let's get into that. So step one, this is one of the easiest steps on the entire form. Very simple, just put your first name and middle initial, last name and your social security number and your address. Sometimes people get confused if they have like a PO box or maybe multiple addresses. The best way to know kind of what address to put on here is just look at your prior year tax return. For most people, unless you just, moved recently, for most people, their tax situations don't change year to year. So whatever address you had on your Form 1040 last year, it'll make sense. That's most likely the address you should have on this W-4, just wherever you live right now. Same with letter C here. Your filing status, unless you've had a major life event like you got married, divorced, or your spouse passed away, your filing status is most likely going to be the exact same as last year. So you can just look at your prior year tax return and see what you claimed last year. Moving on, step two. So this is a slightly more complicated step, but it's also still not that complicated. It doesn't actually apply to you if you don't have multiple jobs or a spouse that works. If this doesn't apply to you, we can just skip past it and get to step three. If it does apply to you, the IRS has actually included this little worksheet down here, step 2B, to help you calculate the amount that you'll need for step 2 on the top portion of the form. But they actually have this new thing here. If you go to this link, irs.gov/W4 app, they have a tax withholding estimator. And this basically works the same way as your tax software. So let's say you use TurboTax, it's kind of the same thing. It's very like interview based, whatever you answer, they kind of have some notes and they basically just ask you questions and keep going with follow-up questions till eventually you'll get to, I'm just putting in some random information here, by the way, just so you guys can see how this works. But basically, they'll just ask you some questions till you can get to the next portion of the estimator and come up with your results at the very end. I don't know if they'll let us see this. Yeah. So if step 2 does apply to you, you have multiple jobs. Maybe you drive Uber at nighttime and then during the day you work at a chocolate factory or something and your husband or your wife has a job. Step 2 will apply to you, so I would recommend just hitting that link and going to the IRS website to figure that out. So step 3 is actually where they start to factor in the potential of you taking a child tax credit at the end of the year and how that would affect your tax calculation. So if you make under $200,000, which is kind of the cutoff for that credit, you'll want to enter this information. And just a quick reminder that a qualifying child is a child that was under the age of 17 as of December 31st of the tax year. And they must be your dependent who generally lives with you for more than half of the year. And they must have a social security number. Again, for most people, if you don't have a major event like your child didn't turn 18 and go off to college or something like that, you probably have the same amount of dependents this year as you did last year. So you can always look at your prior year tax return to figure that out if you're confused. So in this example, let's assume you have 2 kids. You would take 2 kids times 2,000 and gets you your answer of 4,000. And then let's say you have a different dependent, like a parent. Let's say your mom lives with you. You can take a $500 deduction for her, or a $500,000 amount to put on this line to calculate this grand total of $4,500 here. Step 4, again, this is an optional step. Essentially, step 4 is where you factor in your income from other jobs. So let's say you're a chocolate factory worker, like we said earlier, but you do something that might not have a 1099. Let's say you have a lemonade stand. you would want to estimate kind of how much income you're making from your lemonade stand. Let's say that's $5,000 a year. So you'd want to enter your $5,000 there. And then you have 4B for your deductions, only if you plan to itemize and you don't plan to take the standard deduction. Now, if you don't know which one you're doing, like if you're very confused by that question, for example, again, just look at your prior year tax return. That's kind of the best way forward you have with these kind of forms, is just to look at what you did last year, assuming you did a good job of doing your taxes last year, or had somebody do them for you, or they were looked over, or you didn't have any issues. If you took the standard deduction last year, you're most likely taking the standard deduction this year. If not, if you do itemize, just enter the amount that you plan to take as an itemized deduction. So let's say you're single, so your standard deduction would be $12,000, but you plan to itemize $14,000. You'd put your $14,000 there. Now, step 4C, extra withholding. Now, this is a completely optional question to answer. Essentially, this is for people that want to be cautious and withhold more money from their taxes than they need to, or from their paychecks for their taxes than they need to. I know some people like to create what's called like a forced savings by essentially having their withholding amount be way higher than it needs to be, so that at the end of the year when they file their taxes, they get a return, like a refund, because they overpaid their taxes. So they'd rather have maybe like a $3,000 kind of windfall at the end of the year, and they'll put that into their savings account because maybe they weren't disciplined enough to save their money throughout the year manually. And then there's other people that, they kind of want to minimize how much withholding they have, and they'll pay a bill at the end of the year to the IRS for taxes. My recommendation is somewhere in the middle. You don't want to have a penalty racked up because you didn't pay any, you didn't withhold enough at all, like you're not even close. But you also don't want to give the IRS an interest-free loan if you don't have to. You don't want to get like $10,000 back at the end of the year and realize you could have invested that, especially in this day and age. The market is so random, who knows what that 10,000 could have turned into. But yeah, you just don't want to essentially give away your money for free for no reason if you don't have to. And then your final step here is just sign right there, date it, and then return this form to your employer, and they'll fill out the employers only section. And I believe they send a copy to the IRS as well. And then they'll know how much to withhold from your paychecks. And then you are done with the Form W-4. See, that wasn't so bad. Sometimes taxes can be kind of easy, right? But anyway, thank you for watching. If you enjoyed this video, give it a thumbs up. If you have any questions, be sure to just ask them in the comments. I will definitely look out for those and answer them. Subscribe, hit the bell notification. It really helps the channel grow. It's really great for the algorithm, and you'll get to see my content as I post more of it. My name is Shawn Gill, CPA. Thank you for watching. I will catch you next time. Peace.
I like Shawn.